Welcome to Nasdaq Trade Talks. I'm Jill Malandrino, Global Markets Reporter at Nasdaq. Joining me is Greenberg, CEO of LexShares, to discuss litigation as an asset class, connecting investors to fund cases of other accredited investors. Now, Jay, this is really interesting. It's my first time covering this type of asset class. Tell us more about LexShares.
Well, Jill, really appreciate you having me. LexShares is a commercial litigation finance firm. So we founded LexShares in 2014 and have since invested in over 100 commercial legal claims, becoming one of the most active commercial litigation finance firms in the United States. And, we're a bit unique in that we invest in litigation-related assets through both a private fund that we manage, as well as an online marketplace that we operate at LexShares.com, where both institutional and individual investors can come and invest in our single case offerings. And earlier this week, we actually launched our LexShares Marketplace Fund 2 vehicle, which is a $100 million fund, which is now open for investment on our platform. And I'm happy to take a step back and talk about what litigation finance is, because I think that's a term that means different things to different people. So at LexShares, what we mean by litigation finance is providing capital to plaintiffs and to law firms in exchange of a portion of the future recovery from their lawsuit. So for an example, if Jill Corporation approached LexShares and had a breach of contract case against company XYZ, if that case was an investable case, and we can talk about what makes a case investable, we would provide capital to Jill Corporation. If Jill Corporation was successful in litigating their case, we would receive a portion of the proceeds that Jill recovered in that lawsuit.
So Jay, a couple questions here. Why is this such a unique asset class? And as an investor, what background do you need to have? Is it a typical finance background, or do you find a lot of these investors have a legal background so they're able to analyze these cases? Why is this so unique?
That's a great question. So I'm actually not an attorney by training. So prior to founding LexShares, I was an investment banker at Deutsche Bank. And what originally attracted me to the asset class is, I think, what attracts a lot of investors to the asset class are some really unique financial attributes that it has. And so, on the LexShares platform, you definitely do not need to have a legal background to invest in these cases, because our underwriting team, who are former litigators, are vetting all of these case investment opportunities prior to them being posted to our platform. And so the first unique financial attribute of investments in a litigation asset is really that it's uncorrelated. So, it doesn't matter what the stock market does, what commodity prices do, what interest rates do. The return associated with an investment in a piece of litigation really exists inside this courtroom vacuum. And it's extremely difficult for institutional investors, might as well individual investors, to get their hands on that type of zero beta asset. And that's what initially attracted me to the space as a corporate finance professional. I'd say some other attributes that are attractive about investing in litigation related assets is really the strong return profile. So, since LexShares' inception in 2014, the median annualized rate of return for our resolved investments is about 52% to our investors, net of fees and expenses. And there are a couple other attributes that I find interesting about the asset class. One is sort of moderate investment duration. So on average, a civil case in the United States from filing to disposition takes about 27 months. If you look at LexShares' track record for resolved cases from the time of investment to recovery, that's about 15 months, which is shorter in duration than a lot of other alternative asset classes. And then the other factor I think is interesting about investing in litigation is this inevitable realization event, because legal claim investments are assured realization through the judicial process, right? Cases either settle or are adjudicated. So as opposed to investing in a technology company or investing in a piece of commercial real estate, there doesn't need to be an IPO or a sale catalyst in order to monetize that asset.
So tell us more about the fund that was launched just this week.
Absolutely. So LexShares Marketplace Fund 2 is a $100 million fund. And essentially the strategy for LexShares Marketplace 2, it comes on the heels of LexShares Marketplace Fund 1 that we raised in 2018. And LexShares Marketplace Fund 2 will continue to execute the strategy that we've been executing on at LexShares, which will invest in all of the cases that we post to our online platform. So LexShares Marketplace Fund 2 will be an investment where you can invest in one vehicle and get diversification across a number of litigation related assets, things like breach of contract cases, breach of fiduciary duty cases, antitrust, false claims act cases, as well as assets including loans to law firms or portfolio fundings of law firms, which are essentially collateralized by their contingency fees. So LexShares Marketplace Fund 2, which is open for investment now on the platform, it has a minimum investment amount of $250,000. And it also has another unique financial attribute where the insurance provider AmTrust is offering a principal protection insurance wrapper to ensure investors' commitments in the fund, which we think is an exciting feature.
All right, Jane, to wrap up here, do you think the current dislocation of capital markets will drive greater demand for this type of asset class?
Yeah, we do think the current dislocation in capital markets will drive greater demand. It's interesting running a two-sided marketplace. We've seen increased demand on the investor side as investors rotate out of equities and rotate into uncorrelated assets like litigation finance. And we've also seen increased demand on the plaintiff, attorney, law firm side as they look to shore up their balance sheets and de-risk.
All right, Jay, thanks so much for joining us on Trade Talks.
Thanks so much for having me, Jill.
All right, and thanks for joining me. I'm Jill Malandrino, Global Markets Reporter at Nasdaq.